Hey, it's Mike over at Cross Country Mortgage, and it's time for your Monday morning mortgage update for the week of April the 14th. Love the weather in the North State. Hope you had a great weekend. I spent a lot of time on my mountain bike this weekend. There's a great challenge that happens every year in the North State. It's called the Bigfoot Adventure Challenge, and they set up all these courses where you can actually have run courses and bike courses and gravel bike courses and walk your dog courses. And if you go to the Bigfoot Adventure Challenge, it's a great community event. It's 2 months long, and you can check off all these trails. It's a great way to learn about the trail system in Redding, in the North State, not just Redding, and Mount Shasta and over in Weaverville. So check that out. It's a great, great event, and partake in it. Okay, let's get back to the market. So always try to give you some insights, some tools and tactics that you can use when you go out there buying a house, selling a house, and making those important decisions. Let's talk about last week and what's going to happen this week. And last week, boy, what a week. I'm just going to go right to the bond market chart to show you the significant movement we saw last week. So this is 6 months of bond trading. That's where mortgage-backed securities are traded. That's where mortgage rates are determined by the trading. When we see this graph go down, like on the right-hand side here, that last week, that means mortgage rates go up. When we see the graph go up, we see the green bars. That means rates get better. So last week, 150 basis point sell-off in the bond market in 1 week. That's a significant move. You know, you can see this big down graph here. If I go out just kind of a maximum, and this is all the way back to 2023, tell me the last time you saw that. Where can you see that movement in such a short period of time? Maybe in 2024, October of 2023. So it's not something that happens very often. And tariffs drove the bus here. All of the back and forth between China and the US, the announcements on Wednesday on what Trump was going to do with China tariffs, the announcement the week before on Wednesday on what he's going to do with other country tariffs. It just has been causing extreme volatility. And if I quoted you, let's say a 7% interest rate on Monday of last week, and it was par, meaning no discount points, no points on that, didn't cost you anything to get that rate. On Friday, that same rate would have cost you 1.5 points. So that's 1.5 times the loan amount. So if your loan amount's $100,000, now it costs you $1,500, $200,000, $3,000, $300,000 loan, $4,500 to get the same rate on Friday than would cost you nothing on Monday. So again, big, significant changes. And there's just instability and unsureness. And whenever that happens, typically money will flow into the bond market. But what we saw last week is money flowed out of both markets. People just didn't know where to put their money. They didn't want to take a risk in either the stock market or the bond market. So they pulled it out, cash, maybe bought gold, whatever they were doing. And now we're starting to see money trickle back in. And so that's what we'll talk about this week, about what's happening. The other thing that happened last week, which didn't get much news and it really didn't move the market, is inflation actually was negative. It came down. This is the first time we've seen negative inflation. I can't remember when. I don't know if it's been 2 or 3 years since we've seen actually negative inflation. Came in under expectations. That would have been great for mortgage rates, but the tariffs just overshadowed all that. All right, so what are we looking at this week? Tariffs. That's about it. Some data that's going to come out, but the tariffs are going to cause the market to move and cause volatility. So let's do a little bit of review here. All countries have 10% tariffs across the board. That is established. And all increases more than that, Philippines, Vietnam, Germany, whatever, Japan, all those countries are on pause for increased tariffs for 90 days. And that caused some positivity in the stock market. And now the Trump administration is going to be negotiating with these countries to settle on where those tariffs are going to end up. All of this except China. US and China has been going back and forth for over a week. Now we're charging them 125% on products that come in. They're charging us the same. They said they won't go higher. And what this is causing is supply chain disruptions. China's not even sending products to our country right now. They don't want it sitting on a ship in the middle of the ocean, because when it hits our ports, the importers have to immediately pay 125% to get that product. and then they got to sell it to us. And are we going to be willing to pay that increase in the product? Now, what they want China to do is lower their costs on their end so those tariffs aren't as much of a hit. Who knows? We'll see that if that happens. Obviously, this is all negotiating. If we, the problem with the increased tariffs is it's inflationary, and inflation is the death of mortgage rates. So um, we'll see how that really works out. Now, the one exception is chips and phones, computer chips and phones, but that's not going away. That's just paused for 60 days, and then it'll go back up to 125% unless they come to some agreement. So the tariffs are going to cause a ton of volatility this week, and we'll see if it's going to be more of a positive volatility than a negative like last week. We have a short week because of Good Friday, so really 3.5 days of trading. Everything will shut down Thursday afternoon. Retail sales is coming out Wednesday. If we see lower retail sales, which means weakening economy, we're not going to see the impact of retail sales because of the tariffs. That's going to be next month, which could be very impactful. That's positive for mortgage rates. And so we're starting off the week, as you can see on the right here, 50 basis points up. I mean, this is great. This is a live feed. So we'll take it. We'll take the positive news and the improvement to mortgage rates. So again, a lot of volatility this week. The market expects we'll see a more of a lean to better mortgage rates, not the negative and really the downward turn that we saw with money flowing out of the bond market, because there's no tariff announcements. It's just going to be news. So hang on to your hats. Let's hope we don't have any negative movement or as much negative movement that we did last week. We're in a floating position today. Obviously, quick to lock if we see the market move. Have a productive week. Look for my Friday rate drop on Friday morning. Just gives you a summary of what the rates are. If you want to be on that text feed, let me know. I'll definitely shoot it out to you. Just email me back and we'll put you on that feed. And it goes out every morning before noon and just gives you a summary of the market. Have a great productive week. We'll talk to you soon. Bye-bye.